Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmed bin Bahrain. Our team will present on forensic auditing in public sector. I will present on the introduction part and compliance auditing. Introduction to public sector audit. Public sector auditing and its objective. Public sector auditing helps to create suitable condition and reinforce the expectation that public sector entities and public servants will perform their function effectively in accordance with the applicable laws and regulation. It also provides legislative and oversight bodies to those charged with governance and the general public with information and independent and objective assessment concerning the stewardship and performance of the government policies, programs, or operation. It emphasizing the principle of transparency and accountability. Public sector auditing contributes to good governance by providing the intended users with independent, objective, and reliable information, conclusions, or opinion based on sufficient and appropriate evidence relating to public entities, enhancing accountability and transparency, encouraging continuous improvement and sustained confidence in the appropriate use of public funds and assets and the performance of public administration, reinforcing the effectiveness of those bodies within a constitutional arrangement that exercise general monitoring and corrective function over government and those responsible for the management of publicly funded activities, creating incentive for change by providing knowledge, comprehensive analysis, and well-founded recommendation for improvement. So this is the Malaysian Auditor General Office vision and mission. For vision, it's aimed to be a more independent, professional, and internationally standing audit institution. And their mission is to conduct audit in a professional manner based on international auditing standards in order to produce quality audit reports and to meet stakeholder needs. The objective of Audit Department based on National Audit Department of Malaysia. First is to prepare timely audit reports to be submitted to the Parliament or State Assembly. Second, to carry out the audit and to prepare the reports in fair and independent manner. Third, to meet the needs and expectations of stakeholders and auditees. Fourth, to effectively and efficiently manage audit activities. And the last one is to be an exemplary department among developed countries. So this is a clause that provide under federal constitution where it stated the appointment of Auditor General under Article 105 of Federal Constitution, where Auditor General shall be appointed by YDPA upon advice from Prime Minister, and subject to this provision and article, all terms and conditions of service of Auditor General shall be determined by the federal law and subject to the provision of federal law by Yang di-Pertuan Agong. Article 106 of Federal Constitution stated that the accounts of Federation powers and duties of Auditors General, where the accounts of the Federation and stats shall be audited and reported on by the Auditor General. Article 107 also stated on the reports of Auditor General, where it stated that Auditor General shall submit his report to YDPA, who shall cause them to be laid before the House of Representatives. So this is the illustration where Auditor General powers affect the public sector and its interests in public at large. Compliance audit. It is an independent examination to ensure all financial operations have been carried out in compliance with statutory, regulatory, administrative requirements by all government agencies. The illustration is as follows. It is divided into three. Number one, to with regard to a separate compliance audit. Second, in relation with audit financial statement. And the last one, it is in combination of performance auditing. What is objective of compliance audit? The aim of compliance audit is to evaluate the effectiveness of the structure and system of financial management, to evaluate the effectiveness of internal financial control system, to ensure that financial management is in accordance with law, rules, and regulation, and to ensure that records and statements are being kept and maintained regularly. How compliance auditing is performed? Compliance auditing is performed by assessing whether activities, financial transactions, and information are, in all material respects, is in compliance with the authorities which govern the audited entity. It must be in accordance with Federal Constitution and Audit Act 1957. It is done for every minister, for example, JIM, PDRM, JPJ, Custom, State Finance and Treasury Department, States, SUK, State Economic Development Agencies, and Majlis Agama Islam. It also be done every 3 years for Federal Department and State Department. Add elements of evaluation. Sangat baik, baik, memuaskan, kurang memuaskan, tidak memuaskan. As such, we can see that compliance auditing is very important. Public sector has to adapt their ability to deliver their tasks and role to match or risk losing accreditation in spending the public's money. It is, in turn, to protect the trust of the public in executing the responsibility given and to avoid all sorts of issues in the future. It is also as an act of assurance for the public in their performance and delivery system of public sector. Thank you. That's all from me, and I will proceed the button to my members.
Financial audit. A financial audit is an objective examination and evaluation of the financial statements of an organization to make sure that the financial records are a fair and accurate representation of the transactions they claim to represent. What is a financial statement? A financial statement is a structured financial representation of the financial position of an organization, showing the effect of the transactions it has undertaken over a specified period of time. What are the objectives of a financial statement? 1. Is to provide information for the purpose of decision making and to indicate an entity's accountability on its resources. 2. A financial statement also serves as a projection tool on an organization's financial performance. Elements in a financial statement. There are 6 elements. The first one is financial performance statement. 2. Financial standing statement. 3. Cash flow statement. 4. Budget performance statement. 5. Changes in net asset or equity statement. And 6. Notes to accounts. Financial management of the Malaysian government. There are 3 levels of management mechanism. The first one is the pre-implementation. For example, the policy maker. This refers to the management mechanism at the Parliament legislature where all the policy regarding the financial management is set up through budget or annual appropriations. The second level is the implementation level, which refers to the mechanism at the ministries, departments, and agencies. The third level is the post-level implementation, which refers to management mechanism at Auditor General Office and other watchdog agencies like the Malaysian Anti-Corruption Commission. Financial management activities in the Malaysian public sector. The activities would include budgeting, accounting and reporting, auditing and performance management apart from core activities that is revenue generating and expenditure incurring. The legal provisions in Malaysia public sector financial management. 1. The Federal Constitution 1957. 2. The Financial Procedure Act 1957. 3. The Accountant Act, Audit Act 1957. 4. The Local Government Act 1976. 5. The Statutory Body Act 1980. 6. The Financial Reporting Act 1997. 7. The Treasury Instructions Circular and Circular Letters. And 8. The Standard Accounting Standards. Audit practice in public sector. Generally, audit practice in Malaysia can be divided into 2 categories, which is the internal and external auditing. External auditing is carried out by the National Audit Department under Auditor General as stated in the Audit Act 1957. In the context of financial auditing, failure to detect error, which error in these circumstances means financial statements do not give true and fair view. The internal audit in public sector. According to the Treasury Circular PS 3.1 2013, establishment of internal audit function is under the responsibility of the Secretary General of the Ministry or Head of Federal Department or the State Secretary. For all departments without internal audit function, the internal audit activity must be conducted by the internal audit function of the ministry that governs the respective departments. At state level, this internal audit function is referred to the endorsed internal audit function under purview of the State Secretariat Office. The importance of internal audit in public sector. The internal audit's main objective is to assist the government to achieve sound public financial and operational management through effective public spending, financial accountability, and transparency. The internal public function in public sector. The internal audit function holds high potential for promoting accountability and improving government performance. However, the public sector operations are inflexible where there are more laws and regulation authorizes the activities of internal audit. Meeret in 2007 argued that there are 2 types of audit that are applicable to the public sector, which are financial related audits and performance audits. Financial related audits are audits which contain ideas on financial statements or were based on the audit of financial statements. The objective of a financial statement audit is to decide whether the financial statements are fairly stated. Performance audit highlights on whether public assets are being used in a well manner with an aim of recognizing and reducing wastage.
The public sector holds substantial public responsibility for health, human service, housing, communication, schooling, and defense. Each financial year, there are budget allocation for each of these areas in order to provide the nation and society at large with necessary service. With respect to budget allocation, auditing the government department is essential to ensuring that these funds are used efficiently. In the public sector, there are basically three forms of audit: financial audit, compliance audit, and the performance audit. Performance audit assess the performance of the public entities in achieving the stated objective or objective beyond the scope of the financial and the compliance audits. It is an independent assessment of the three related elements of government performance: economy, efficiency, and the effectiveness. Three is Three elements in government performance: three is economy, efficiency, and effectiveness. The economic dimension refers to how well production costs can be reduced, while efficiency refers to the relationship between optimizing output and minimizing production, and the production refers to achieving goal and desired result in the public sector organization. Of the three elements in a performance audit, auditing the effectiveness is the claim to be the most challenging. The uniqueness of the performance audit is the key provide an assessment of the attainment of government policy, objective or goals. When audit is done, the public should be granted greater public oversight and disclosure in the public financial statement. What is performance audit? A modern approach to strategic internal audit planning for the public sector, and briefing today on the performance measurement used by internal auditors. Performance management in the public sector using a balanced scorecard as a tool. Real-life experience in developing and implementation a balanced scorecard for public sector auditors. Developing effective corporate governance for internal auditors in the public sector to achieve strategic outcome, challenge, opportunities, and pitfall. KPMG, public sector BSc, the three pillars: public sector management outcome and transparency. Best corporate risk management and internal audit tool to enhance internal audit function, integrated strategic corporate governance framework. Next step for the perform auditing. Benefit of performance auditing in public sector. A global move towards better public sector financial reporting, a path to good performance, detection, mitigation, and prevention of fraud and corruption in the public sector. Current developments and challenge of performance auditing in the central government of Malaysia. Risk mapping, a valuable method for public sector risk assessment auditing. Corporate-wide risk control, a realistic approach to quality for public sector auditor. Risk-based auditing is a realistic solution. Three keywords in performance audit in public sector. First one is performance measurement. Second one, balance scorecard, and the last one is risk management. Performance measurement. Performance measurement used by internal auditors. Example, make value creation. such as profit and social responsible, is the timing. For stakeholders, financial means a healthy cash flow. For the customer and workers who are happy and loyal, the last one is to the vendor, make more competitive and more secure. The second one is balance scorecard, a framework to implement strategy into action. Buzzword is mission, customer, financial, internal process, learning and growth. The balanced scorecard process allows an organization to align and focus on its resource on its strategy. And the last one is risk management. How to manage risk? What is risk? In the context of the financial auditing, failure to detect error is mean error means financial statement do not give true and fair view. In the context of the performance auditing, di setiap jabatan and agensi kerajaan, failure to highlight kerugian and losses is mean value creation, management oversight iaitu mematuhi surat perkeliling, akta atau garis panduan, social responsible and many more. Internal audit should establish key performance indicator (KPI) to measure its own performance. This should be links to the audit mission and objective that are contained in the internal audit charter.
Hi, I'm Gary. I'll be presenting for the forensic audit topic. So what is forensic audit? So forensic auditing covers a broad spectrum of activities with terminology not strictly defined in regulatory guidance. Generally, the term of forensic accounting is used to describe the wide range of investigative work which accounting practice could be asked to perform. The terms are actually not strictly defined in regulatory guidance, and the meaning of forensic accounting is quite broad. It is the application of accountancy skills and knowledge in circumstances that have legal consequences. There are many circumstances with legal consequences in which accountancy might be required. The most well-known of which is investigating alleged fraudulent activities. Forensic audit is the whole process of carrying out a forensic investigation, including preparing an expert report or witness statement, and potentially acting as an expert witness in legal proceeding. Forensic investigation is a process of gathering evidence so that the expert report or witness statement can be prepared. It incorporates a much broader range of investigative techniques, such as interviewing the witnesses and suspect, imaging or recovering computer files including emails, physical search of premises, and etc. Forensic auditing is the application of traditional auditing procedure and techniques in order to gather evidence as part of forensic investigation. Finally, forensic auditing refers to the specific procedure carried out in order to produce evidence. Audit techniques are used to identify and to gather evidence to prove. For example, how long does the fraud have been carried out, and how was it conducted and concealed by the perpetrators. Evidence may also be gathered to support other issues which could be relevant in the event of a court case. Such issues could be the suspect motive and opportunity to commit fraud. Whether the fraud involved collusion between several suspects and any physical evidence at the scene of the crime and contained in documents. Comments made by suspect during the interviews and or at the time of arrest and attempt to destroy evidence. So, the general step of forensic audit. First is administrative data, which actually such as review of applicable law and policy of the company's organization, chain of custody of forms, digital evidence collection forms, consent form if required, and evidence tracker and evidence store. Second, then they go to planning, where the investigator will gain understanding of the entity, area, and process of subjected to forensic audit, background of the organization, review of previous audit work, if any, deliverables, create analysis work plan, and create investigation plan. And after that, there will be a collection of evidence, where collection of evidence as per the investigative plan. Evidence should determine the period when the fraud occurred, uh, evidence that in respect to concealment of fraud, corroborative evidence to prove the fraud, and the review of logical flow of information. And then after that is analysis, where substantive techniques like doing reconciliation, review of plan document, analysis of comparative data of different segments, establishing correlation of various data, analysis of trends, comparison of data with a benchmark data, analysis of beyond the financial data like the data available in the mail, analysis of email, and identify the source of data and transfer of various data. And after that, there will be an internal control step where the investigator will understand the internal controls of the organization, understand where the loophole is there that allow the fraud to be perpetrated, and then the testing of the operational efficiency of the internal control, interviewing the suspect, and then use the software for processing and enabling or concealing the fraud. And last but not least, reporting, where the investigator will document the findings comprehensively, the facts, and then the summary of evidence, explanation of the perpetration of fraud, and suggestion on improvement of internal control to avoid the same fraud being recur again in the future, or any other fraud that can be prevented in the future. So, what are the types of investigation? Actually, there are many types of fraud that can be asked for investigation. However, it can be categorized into three groups to provide an overview of the wide range of investigation that could be carried out. The three categories of fraud are as follows. First, corruption. Second, asset misappropriation. And third, financial statement fraud. There are three types of corruption fraud: conflict of interest, bribery, and extortion. Research shows that corruption is involved in around one-third of all fraud. So first is conflict of interest fraud. So fraudster exert their influence to achieve a personal gain which detrimentally affects the company. Fraudster may not benefit financially, but rather receive an undisclosed personal benefit as a result of the situation. For example, a manager may approve the expenses of an employee who is also a personal friend in order to maintain that friendship, even if the expenses are inaccurate. Second is bribery. Bribery is when money or something else's value is offered in order to influence a situation. So bribery is a common use of corruption. And the third one is extortion. Extortion is opposite of bribery and happens when money is demanded rather than offered in order to secure a particular outcome. Next is the asset misappropriation. By far the most common fraud are those involving asset misappropriation, and there are many types of fraud which fall into this category. The common feature is the theft of cash or other asset from the company. For example, cash theft, the stealing of physical cash, or for example petty cash from the premises of a company. Fraudulent disbursement, company funds being used to make fraudulent payments. Common example including billing scheme, where payments are made to fictitious supplier, and payroll scheme, where payments are made to fictitious employer, often known as ghost employee, where the employee actually does not exist but it is in the payroll. And then next is the inventory fraud, where the theft of inventory from the company. The misuse of asset. Employees using company asset for their own personal interest. So if you notice that asset misappropriation is actually done by the employees of the company or the organization. It is not done usually by the top management, but it's usually done by the lower management of the company. The financial statement fraud. This is also known as fraudulent financial reporting. and is type of fraud that causes a misstatement in a financial statement. It can include deliberate falsification of accounting record, omission of transaction, balances or disclosure from the financial statement, or the misapplication of financial reporting standard. This is often carried out with the intention of presenting the financial statement with a particular bias, for example, concealing liabilities in order to improve any analysis of liquidity and gearing. So actually, financial statement fraud is done by the top management of the company, trying, for example, to meet their target, or maybe if they have the director have the share option, they will try to make it more positive, so they have more bonus or can opt for the share option. Planning the investigation. The investigation team must carefully consider what they have been asked to achieve and plan their work accordingly. So the objective of the investigation will include identifying the type of fraud that has been operating, how long it has been operating for, and how the fraud have been concealed. And then the next one is we need to identify the fraudster involved, quantifying the financial loss suffered by their client, and then we also need to gathering evidence to be used in the court proceeding, providing advice to prevent the reoccurrence of the fraud. The investigator should also consider the best way to get evidence. The use of computer-assisted audit techniques, for example, is very common in fraud investigation. Gathering evidence. The evidence should be sufficient to ultimately prove the identity of the fraudster, the mechanics of the fraud scheme, and the amount of financial loss suffered. It is important that the investigating team is skilled in collecting evidence that can be used in a court case and keeping a clear chain of custody until the evidence is presented in court. If any evidence is inconclusive or there are any gaps in the chain of custody, then the evidence may be challenged in the court or even become inadmissible. Investigators must be alert to document being falsified, damaged, or destroyed by the suspects. Evidence can be gathered using various techniques such as testing control to gather evidence which identifies the weaknesses which allowed the fraud to be perpetrated, using analytical procedure to compare trends over time or to provide comparatives between different segments of the business. Applying computer-assisted audit techniques, for example, to identify the timing and location of relevant details being altered in the computer system. Discussion and interviews with the employees. Substantive techniques such as reconciliation, cash count, and review of documentation. The ultimate goal of the forensic investigation team is to obtain a confession by the fraudster, if a fraud did actually occur. For this reason, the investigators are likely to avoid deliberately confronting the alleged fraudster until they have gathered sufficient evidence to extract a confession. The interview of the suspect is a crucial part of the evidence gathered during the investigation. The There will be a reporting at the end of the gathering of evidence. The client will expect a report containing the findings of the investigation, including a summary of evidence and a conclusion as to the amount of loss suffered as a result of the fraud. The report will also discuss how the fraudster set up the fraud scheme and which control, if any, was circumvented. It is also likely that the investigative team will recommend improvements to control within the organization to prevent any similar fraud occurring in the future. And then, if needed, there will be court proceeding. The investigation is likely to lead to a legal proceeding against the suspect, and members of the investigative team will probably be involved in any resultant court case. The evidence gathered during the investigation will be presented at court, and the team members may be called to court to describe the evidence they have gathered and to explain how the suspect was identified. This is where they will come as expert witnesses in the court. It is imperative that the members of the investigative team called to the court can present the evidence clearly and professionally, as they may have to simplify complex accounting issues so that non-accountants involved in the court case can understand the evidence and its implication upon the company or the organization. So conclusion, In summary, a forensic investigation is a very specialist type of engagement which requires a highly skilled team member who have experience not only of accounting and auditing technique, but also of the relevant legal framework. There are numerous different types of fraud that a forensic accountant could be asked to investigate. The investigation is likely to ultimately lead to legal proceeding against one or several suspects, and members of the investigative teams must be comfortable with appearing in court to explain how the investigation was conducted and how the evidence has been gathered. Forensic accountants must therefore receive specialist training in such matters to ensure that their credibility and professionalism cannot be undermined during the legal process. So, there are several professional bodies that specialize in forensic accounting, such as Association of Certified Fraud Examiner (ACFE), Institute of Certified Forensic Accountant (ICFA), International Institute of Certified Forensic Accountants (IICFA), and National Association of Forensic Accountants (NAFA), where all of the professional body helps to train and educate professionals in specialized forensic accounting. The government of Malaysia actually established the Malaysian Anti-Corruption Commission, which serves as an organization of accountability and transparency. The MACC has wide power to enforce all applicable law to arraign, prosecute, and confiscate on behalf of the state from any perpetrators of occupational fraud or white-collar crimes. Actually, there is no statistical data in Malaysia to verify or confirm the level of fraud in public sector. Yet the research argues that the fraud has become endemic as echoed by PwC survey in 2011 and the Auditor General 2011 audit report on the government financial statement.